Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the weekend edition of Bloomberg Businessweek. We are just a few days out from Election Day in the U.S., and the presidential contest between Donald Trump and Kamala Harris could not be any closer. But it's not just the election that we're focused on. We're in the midst of earnings season, and this past week, 5 of the most valuable companies in the S&P 500 reported results. We also got 3 key economic indicators: GDP, an inflation print, and the October jobs report. Needless to say, it's been a busy week. Oh, and let's not forget another rate decision from the Fed in the coming days. For the latest information on the election and the economy, head on over to Bloomberg.com or the Bloomberg Terminal. This hour, we'll break down some of the mega cap earnings we got this week. We're talking Meta, Amazon, Apple, Microsoft, and Alphabet. Plus, the importance of leadership in times of crisis. The president and CEO of the 9/11 Memorial and Museum stops by to teach us about leading through challenges. All of that to come, though we begin with the so-called Trump trade. Bloomberg opinion columnist John Authers writes that the Trump trade is, quote, back in full sway. And many believe we're heading for a repeat of 2016 when Donald Trump surprised markets by upsetting Hillary Clinton. John joined us this time to point out some important differences.
You could argue about whether the move in the market has influenced what people are expecting, but I think it's fairly clear that most Wall Street, most financial markets are now working on the assumption that a Trump victory is about a 2 in 3 shot. So clearly more likely than a Harris victory, but not something anybody would want to bet their entire life savings on, because the markets still think that there's a 1 time in every 3 Kamala Harris would win the election. But that's roughly where we are. That means that that's the huge difference this time compared to Donald Trump's first electoral victory, assuming he's going to get a second, 8 years ago, was that at that time it was generally regarded as highly unlikely, depending on which prediction market you looked at. In fact, it was not as big a surprise as some people remember it to be. It was about a 30% shot. So if you're a Democrat out there, the prediction markets think Kamala's chances are as good now as Donald Trump's were 8 years ago. So that's might be something cheery if you're a Democrat. But it plainly came as a very big surprise, even if those were the odds, people hadn't banked on it. So you saw, first of all, a very sharp rise in bond yields. That's largely what we've had in the last month. People have perceived to be shifting in Donald Trump's favor. And you also had a rally in stocks that got a big second wind a year later when it became clear that the Trump tax cuts really were going to happen. So you can explain quite a lot of the rather strange things that have been going on. This is the best year for the stock market of the S&P 500 at this point in the year in over a decade. I think I'm right in saying, despite all the angst and despite the fact that you normally have a fairly torrid time of it the last few weeks before the election, simply because of the uncertainty. Whatever people think is going to happen, you're nervous about chancing your arm ahead of the election. I would say that the reason that's different this time around, or one of the prime reasons that's different this time around, is that people have got it into their heads in the last few weeks that Trump is going to win and that will be good for stocks. And also bad for bonds, but not so bad for bonds that it gets in the way of stocks.
John, one thing I first want to get kind of where we started. I mean, the financial markets in guessing presidential election outcomes, as you said, kind of the predictive market last time around for Donald Trump's first term, I mean, they got it wrong. They didn't expect him to get it, right? And so I guess, I don't know how, someone like yourself, someone like a lot of us who've seen market cycles and election cycles, are we not wise to do the cause and effect or make a correlation between the two? Are investors smart in terms of, playing out their expectations in the financial markets?
I mean, investors are usually pretty smart because they've got money on the line, and because it matters, generally speaking, most of the time, the market is pretty darn difficult to beat. That said, markets do overshoot. They always do that. It's part of the physics of markets. At this point, and it's precisely because it's difficult to talk in these terms because so many of us do care so much about who is going to win this election. At this point, I'm inclined to agree that I think Donald Trump is more likely to win than Kamala Harris. And I also think at the current odds, I would bet on Kamala Harris.
Why do you say that?
You're going to get 200% for your money. She's going to triple your money for you. If you put $1 on her now in the prediction markets, you'll get $3 back next Wednesday if they manage to call the election that quickly.
Wait, so you're not looking into some political crystal ball and making a prediction. You're just saying in terms of a bet, it makes more sense.
In terms of the bet, in terms of the way people think about the NFL or baseball these days, who's going to beat the spread, with the spread I'm currently being offered, I'll take Kamala, if you get what I mean.
Yeah, I get it.
And in terms of where I see the bond and stock markets at this moment, I would also be inclined to get ready for a surprise Kamala trend, which would be good for bonds and bad for stocks in the short term.
So talk a little bit about that, because we haven't seen the bond market, yes, has shifted in the last month, but the stock market has continued to move higher, and it's continued a trend that was kind of interrupted, despite the fact that these prediction markets seem to change, John. When you look at the index level.
I'm not sure I agree with that totally. I think you had 2 months in a row, August and September, when there were really quite sharp sell-offs on the wave of data, the normal economic data at the beginning of the month. You did get the unemployment data, which were surprisingly strong, surprisingly good for stocks, surprisingly bad for bonds, suggesting that we weren't going to need so many rate cuts after all. Then you have Elon Musk rally with Donald Trump. He tweets to everybody to look at Polymarket because it's so good. And then Polymarket mysteriously, thanks to some French-based whale, leaps forward.
Right.
So I personally would say that the trends had largely broken down during August and September. People were getting nervous. And then a combination of, the unemployment market isn't as sluggish as we thought. And, we are going to get Donald Trump, and Donald Trump means growth, has led to this big continued rally in the last few weeks. You wouldn't normally expect this to happen in an election year. This is not right according to the seasonals. They've got their post-election rally in before the election this time, I would argue.
I also do remember, was it election night when Donald Trump won his first term, right? Didn't we see futures initially sell off, and then we saw a turnaround?
It was
right.
It was this was the other fascinating thing, was that yes, for months ahead of that result, any time it looked as though Trump might somehow win, there was a huge sell-off. There was a sell-off.
Right.
When on election night, Tokyo and the Asian markets tank on the news, the S&P futures tank on the news. Everything has come back within a matter of hours. Mm-hmm. The stock market opens up the following morning once the cash market opens. So yes, that was a remarkably swift response. Everybody did what they had been planning to do in reaction to a Trump victory, and then they had time to think, actually, am I so negative about this? Mm-hmm. Donald Trump was relatively magnanimous, one of the most magnanimous speeches he's made that election night 8 years ago, if you remember. So people were soothed that he wasn't going to be quite so mad. And then they suddenly thought, hang on, he's talking about big corporate tax cuts. Right. Those are good for stocks. And the market wasn't priced for such a thing. And you saw a remarkable rebound. And thanks to Trump delivering on those tax cuts a year on, it was more than a year before that rally broke down in 2018. So yes, that was a classic example, though, of I didn't see it coming either, to be clear. Everything seemed to be geared for, oh my God, if Trump does somehow win this, the stocks are going to sell off. Paul Krugman, if you remember, was asked to predict when the stock market would recover, and his reply was, "How about never?"
That was Bloomberg opinion columnist John Authers. Sticking with the election, it's close, needless to say, and that has some political analysts fueling visions of a sequel to the 2000 election. If you're of a certain age, you know exactly what I'm talking about when it comes to the state of Florida. The Supreme Court determining the outcome, remember? The hanging Chad? Despite potential election litigation in various states, the Supreme Court is not likely to determine the winner this time around. Bloomberg News Supreme Court reporter Greg Storr lays down the reasons why.
One of them is legal and one of them is mathematical. The legal issue is that the Supreme Court in recent years has sort of narrowed the scope, narrowed the universe of issues that might actually get there. So there was a case last year, you may recall, it had to do with the power of state legislatures, and in particular, whether the Supreme Court could overrule state Supreme Courts in interpreting their own election laws. And what the Supreme Court said was, we're not going to adopt this theory that says state Supreme Courts don't have any role here. And so that, to some degree, limited the Supreme Court's future involvement. And then the second thing is math. So I am old enough to remember the hanging chads in Bush v. Gore. And that was a fight over 537 votes in a single state that was going to determine the outcome of the election. And unless you have that sort of dynamic, then there's not the opportunity for the Supreme Court, if it wants to get involved, to resolve a single legal issue and effectively resolve the election.
But Greg, at the same time, it doesn't mean there isn't going to be legal challenges regardless of the outcome here. And you write about that. More than 100 lawsuits already that are shaping the 2024 U.S. presidential election. So just because it won't be decided, or I won't say won't, it's unlikely to be decided by the Supreme Court, doesn't mean the lawyers will not be getting paid.
They will be getting paid, and we'll get some things going to the Supreme Court, much like we did in 2020. If you recall, there were a lot of things that came to the Supreme Court. Now, some of those were pandemic related, particular issues involving voting by mail that we hadn't dealt with before. But even after the election, you had that effort, and really an unusual effort by Texas to try to overturn the results in 4 other states. And the Trump campaign threw its weight behind that. The Supreme Court had no interest in that. We've already got a couple things that have made it to the Supreme Court now. There was something filed today having to do with efforts by Virginia. And of course, that's not a swing state, but Virginia is trying to remove about 1,600 people from their voter rolls. And there's a dispute over that. That is now at the Supreme Court. What at this point is probably unlikely is one of these election determining fights like Bush versus Gore.
So this is good? We're so concerned, or so much has been written about the politicization of the U.S. Supreme Court. So is this a good thing in your view as you watch what may happen and what is expected to be potentially a fair amount of litigation after the election results, depending on the outcome?
I think certainly from the standpoint of the Supreme Court's institutional standing, having them not be involved in the case is a good thing. The Supreme Court took a hit with Bush versus Gore, and of course, the court's been under enormous scrutiny the last few years. You've got the 3 Trump appointees who have joined the court, made it much more conservative, some really far-reaching rulings like the abortion one, and then all these ethical scandals that have surrounded the court. And, the court, every justice likes to say, we don't do politics here, we do law. But any decision that they issue that determines or significantly shapes the outcome of the presidential election undoubtedly is going to look political, and that's not the kind of thing they want.
So it raises the question about how the campaigns are dealing with this ahead of time, given that, and we spoke a couple weeks ago to reporters who around the big take about the way that, Greg, this isn't really how the founders envisioned democracy working. The idea of votes then being litigated or elections being litigated. What are their campaigns doing to prepare for the scenarios here?
Well, certainly they are laying legal groundwork. Yes, there are scores of cases that are out there now that potentially could just be, one step away from the Supreme Court if it turns out that I'm wrong, and one of those cases is enough to shift the balance here. So that's one thing. They're making themselves ready. And then the second thing is, both sides have these incredible legal teams that have tried to think through and brief in advance every issue under the sun, so that if it turns out a particular issue is something that they need in a Supreme Court filing that they need to get in within 48 hours, they already have it at the ready. So both sides are ready to go in the event we end up with a Supreme Court showdown. What we won't know is whether that's going to be necessary.
You finished the piece with a quote, and forgive me, I'm just trying to see who said this. And what you get into, the quote is, you need one state being a tipping point and a very narrow margin of victory. And then you need some kind of hook that gets the Supreme Court's attention. And I do think about that, Greg, about what would ultimately get the Supreme Court's attention here.
Yeah, and so just going back to 2000, you mentioned those hanging chads. That was something that got the Supreme Court's attention. It got everybody's attention, this notion that around the state of Florida, it wasn't clear whether these votes were going to count or not, and they were being judged by individuals who didn't have clear standards. And so that got their attention, and then you add into it the fact that there was, at least officially, a 537 vote margin. And so you would need something like that. And, it doesn't necessarily have to be just one issue, just one hook. It could be a couple of them that add up, but something where there's some dispute where one side can say, hey, those 2,000 votes shouldn't have counted, and that might have been enough to shift the balance. That would be the sort of thing where the Supreme Court pretty much would have to get involved.
Hey, one thing I want to ask you, I think we constantly just default to that the litigation would come from the Trump team, but there is potential that there could be litigation on each side, especially if it's super close, yes?
Yeah, absolutely. I mean, if imagine a world where, Donald Trump, Pennsylvania is the key state, and Donald Trump wins it by a few hundred votes. Absolutely, the Harris campaign will be looking for ways to challenge. And, part of, most states have provisions. If an election there is exceptionally close, like it was in Florida, there's a provision there that says the loser can challenge the result. And there's a whole process there. And Al Gore's campaign followed that process, and it eventually led to the U.S. Supreme Court. So if there's a state like that is really close, no matter who's on the losing side, you can bet they will ask for a recount if that's allowed, challenge any votes that might be questionable. Ultimately, though, when it gets to the Supreme Court, the question will be, in part, is this a court that's going to, see our side of the issue on one of those things?
Okay, so how sharp is your pencil in terms of how you're thinking about your job after Election Day?
Well, as a Supreme Court reporter, I have a little bit of a luxury that almost everything goes through a couple lower courts beforehand. So, some other colleagues will be following cases at the lower court level. That's where it will start to play out, and the Supreme Court probably will stay its hand. Now, you mentioned how long Bush v. Gore went along. That was decided on December the 12th. The Supreme Court agreed to take that particular case up on December the 9th. So, quite a lot had happened between, when the last vote was cast on Election Day and when the Supreme Court jumped in that case. And so there's, different cases, different elections will play out different ways, but it's certainly very, very possible that any Supreme Court involvement, should it happen in this election, won't happen for a number of weeks.
Interesting stuff. Like I said, how many times have we said interesting this year when it comes to the U.S. election?
Do we talk about Elon Musk at all?
Go ahead.
And the Musk giveaways?
Oh, go ahead.
Greg?
Yeah, we should get Greg to weigh in on
I'm
this.
curious how you're
thinking
about this. From a legal standpoint, from your perch, how are you watching these giveaways?
Well, there are certainly questions about those. I'm not going to pretend like I know what the answer is, but to the extent money is going to people because they are only to people who have registered to vote, there are questions about whether that is legal. Now, that being said, I'm not yet sure how that would translate to something that would determine who wins or who loses in this case into something that is, Trump v. Harris like. But it is certainly an issue worth watching. I am quite sure that the Harris campaign is thinking about this and how they might use it if they need to make an argument in court.
That was Bloomberg News Supreme Court reporter Greg Storr. Coming up, leadership in a time of crisis with the president and CEO of the 9/11 Memorial and Museum. You're listening to Bloomberg Businessweek. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
All right, Tim. So, we often look at history and past market cycles, past economic cycles to really understand where we are today and where we may be going. It's not a given, as shocks like the great financial crisis and the global pandemic showed us, but the past can help in gaming out the possible scenarios that investors and all of us may be dealing with. And that is something that the 9/11 Memorial Museum thinks about. As they note on their website, nearly a quarter century after 9/11, the lessons learned have emerged with deeper clarity, highlighting key elements of crisis response and continuity that resonate deeply with a new generation of professionals at companies, agencies, and a range of organizations.
With more with us here in the studio, the president and CEO of the 9/11 Memorial and Museum, Beth Hillman. The Memorial and Museum, it is supported by Michael R. Bloomberg, founder of Bloomberg Philanthropies and Bloomberg LP.
Yeah, very involved in the 9/11 Memorial and Museum. Beth, great to have you here with us. We've kind of been talking about the environment before we got going. 9/11 for me always makes me kind of stop and think about where we are in terms of, first of all, what happened that day and how we as Americans began to think very differently, I think it's safe to say, about what national security means and the role of geopolitics in it all. How do you guys continue to think about what security means here for Americans?
For you, Carol, and for me, 9/11 brings up those memories. But there are 100 million Americans born since or too young to remember 9/11 for themselves. Right. Yet there's so many crises upon us now and ahead of us, environmental, geopolitical, health, that will need the kind of leadership that helped us respond to 9/11 in order to get through. So for us, we've realized the crisis leadership programs that we've built over time are responsive to that tremendous need out there right now for people at all levels of leadership within an organization, public and private sectors, to figure out how they can respond to crises they didn't anticipate.
For me, it's hard to think about this as being history because it didn't feel like it happened that long ago. And I think for many of us who were alive and old enough to remember what happened, it's still so vivid, and the images are still so vivid in our heads. But how at the museum and at the memorial do you convey what happened that day and what happened after to a generation that didn't live it?
Well, I think the value of visiting the memorial and the museum in person is really unmatched in helping to convey
Agreed.
What happened, because of the power of the design, of the text, of the images, of the care that went into virtually every decision about how our visitors encounter the memorial and then the museum itself. We have worked, though, to reach the people who can't come in person to the memorial and to the museum. So we now have programs that actually translate some of those lessons outside. But I do think you're right that there's a lot of people who that's so vivid for. They have a hard time unpacking it, yet it's distant enough in time that we've had time to study and to actually understand what happened. And we realize that people came from across New York, the country, the world, to respond to those terrorist attacks and to help New York and the Pentagon, and then in Shanksville, Pennsylvania, the other sites and the people who were affected start to heal, to recover, and to rebuild, and to make sure we remember what was lost that day too.
Beth, we always talk about the great financial crisis and how the role of CFO changed dramatically, right? Because they had to figure out how to keep their company around. Same thing for the global pandemic. 9/11, in terms of what is needed in leaders today, how has that impacted it?
You know, you hit it. The security function that we didn't really realize was at the center of what every organizational leader has to reckon with after 9/11 was certainly on the table. And our Summit on Security brings together private and public sector leaders in security fields who are working to make sure their employees are safe, their customers, their clients, their communities are safe. Because without that baseline of knowing what to expect and how you'd respond when something goes wrong, because we do know it will go wrong, it's that ability to respond in a crisis that 9/11 taught us we all really have to have from the top to the bottom of our organizations.
Well, I was going to ask you, because when you came in, I was like, Okay, underachiever. You have a BS in electrical engineering from Duke, an MA in history from the University of Pennsylvania, a JD from Yale Law School, PhD in history from Yale University. And I feel like that just gives you what an incredible view on kind of the world and how we look at things. What are the specific skills that you think a leader needs today in order to deal with threats that may come from all different places?
I think that being empathetic and understanding the impact that any crisis has on the people who are experiencing it, realizing that they're already responding and their contributions have to be recognized, being able to communicate effectively, it's so important today. You can't communicate too often or too much, and then being calm and decisive, and that's really what some of the iconic leaders that speak actually in our new Leading Through Crisis program.
Like who?
Like Mike Bloomberg, Bob Iger, Ken Chenault, Bill McRaven. There are, and many others, including first responders and private sector leaders, principals of schools, who were actually on that day figuring out what to do. And as they reflect on and they talk about that, it really honestly gives you hope that people can figure out what to do and they can come together when a crisis hits.
The thing is, though, is security has changed a lot in terms of what threats are in, a quarter of a century. We have this whole element of what foreign states or bad actors could do online, targeting infrastructure, cybersecurity, ransomware, and the like. How have you seen the conversations around that shift from those types of targets to perhaps, not a stadium necessarily full of people?
Right. It's interesting. One of the speakers in this year's Summit on Security is the NFL head of security, so Kathy Lanier. No one who's taking care of people at a stadium thinks they don't have to worry about cybersecurity. They realize there's a connection between the virtual and the real. That means that their preparedness in all of those arenas that you just described is essential to the actual physical security of people. Protecting our water safety, for instance, is a technical challenge as well as a physical challenge. So I think what we've realized is that the proliferation of different threats has just broadened the scope of the security professionals responsible and the leaders responsible for keeping all those different elements of our basic security in place.
Jamie Dimon said something about it being like the most threats in terms of geopolitics that he can remember of his career. Forgive me if I'm not quoting it, exactly. I mean, JP Morgan has hired someone on climate, but he's looking at the world and where the threats are coming from. Is the world, I don't know, how do you assess it? How dangerous is it? I mean, I know I asked for the panel I did for you guys in the upcoming summit, and it was Nikki Haley and it was Tom Nides, former U.S. ambassador to Israel. Nikki Haley, of course, former U.S. ambassador to the UN. They both, I think it was Nikki who said 8, and I think Tom said incredibly dangerous. I mean, these are people who understand it from the inside, and I just wonder, do you feel like we're getting better information? Do you feel like leaders are feeling more stressed? Like, how do you see it?
I think that eternal vigilance is always the lesson of people trying to keep others safe and protect our communities and our nation and the world. I think that we didn't realize how dangerous the world was on September 10th.
We never thought something like that could happen.
We felt differently on the 12th, and then we responded since.
You were talking about this, Carol, and you brought this up too. We never thought it would happen. I can remember January 6th, 2021. I think a lot of Americans never thought that would happen. And that type of attack actually happening from within the United States. What do you hear from executives at a time when there's serious political turmoil in our country, just a few days away from the election, how they're navigating this idea that, yes, there's tension within our country too?
I think that creating a sense of community, creating the kind of culture within an organization that can hold people through difficult times, and also remembering, I'm trained as a historian, I think we've seen a lot before. We've forgotten about a lot of what we've seen. The 9/11 Memorial Museum is committed to making sure we don't forget what happened on 9/11. But we have forgotten many of the tremendous challenges and periods of turmoil that we've been through in the United States. They're communicated in a different way now, and they feel more and less immediate, I think, than they have in the past to different sectors of our world. But it's really important to remember we've been through a lot, and people are resilient, and there's rarely one point in time that determines winning or losing. So continuing, regardless of the consequences, I think is important to every agency and organization and company out there.
It's interesting. I think about that a lot, Beth. I think, my dad and his 3 brothers all fought in World War II, and I wish they were still around, because I'm like, I want to pick their brain about the stresses they felt at that time versus what we feel today. I think about with all the college campus protests around the war between Israel and Hamas, and how we had, was it David Weston or somebody who came in and said, during the 60s, right, race riots and the protesting over Vietnam War and so on and so forth. We've seen these times before, but we didn't have social media as much, and the velocity of information, and maybe inaccurate information, false information. And I just wonder how leaders are grappling with all of that, whether they're managing their institutions, their employees, and just trying to figure it out.
I think you're right. It's definitely different conditions than when we faced these challenges in the past. But we also have a lot more muscle than we used to, in terms of during World War II, it was a time when most women didn't contribute to the economy, to the polity, to the intellectual life of the nation, as well as many other marginalized groups. That's a lot more intellectual firepower. That's a lot more people who can help. It's a lot more literal muscle that's out there. So there are a lot of reasons to have hope, notwithstanding the challenges that are out there.
The summit is coming up on...
It launches on the 12th. November 12th it launches, and we're very excited. It's a set of virtual programs with the top leaders across the public and private sector, the nation's top law enforcement official, the director of the FBI, Christopher Wray. There's a tremendous number of people to learn from and to listen to. The director of an agency, the administrator of an agency created after 9/11, the TSA, will help teach us how we can respond to what's out there right now.
Isn't it amazing? Like, you think there was a time when there was no TSA, right? Remember when we all used to walk right up to the gate?
Didn't have to take your shoes off when you were going through airport security.
Meet our families coming right off the plane. It's great stuff, and we participate in some of the panels and definitely learn a lot. So thank you so much for joining us.
Grateful for your support. Thank you.
That was Beth Hillman, President and CEO of the 9/11 Memorial and Museum. And a reminder, the Memorial and Museum is supported by Michael R. Bloomberg and Bloomberg Philanthropies. Michael Bloomberg is founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio. Still ahead on Bloomberg Businessweek, a roundup of this week's earnings from the Mag 7's heavy hitters. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Thursday wrapped up the biggest week of tech earnings for the quarter, with names like Amazon, Apple, and Intel reporting after the bell. James Chalkmonk, technology analyst at Clockwise Capital, joined Emily Grafeo and me right as the results were crossing the terminal. We started off with Amazon. Total third quarter revenue increased 11% to $158.9 billion. That exceeded estimates. And operating profit was $17.4 billion, demolishing the average estimate of $14.7 billion.
Yeah, I think it's just what Andy Jassy has laid out basically about a year ago, that the path to profitability on the retail side of the business will continue and continue in a bigger and bigger way as they achieve the efficiencies across their fulfillment network and further optimize for shorter duration delivery times. So. I think you're seeing what you want to see on the bottom line. The top line continues to perform more of on a status quo basis. So, we continue to like the name and pretty pleased with the quarter.
One big theme that we were looking at is whether these big tech companies are seeing the results in their earnings from all of the CapEx that they've done on AI. What does this Amazon earnings tell us about whether Amazon is able to kind of show all of the investments, the fruit of their investments?
Yeah, I haven't gone through it with a fine-tooth comb to gauge and assess kind of the returns this quarter. But I think that from a bigger picture perspective, you're not going to see a lot of trickle down to the bottom line or accretion to revenue on a short-term basis. I think that these are much longer-term investment cycles that will bear fruit over a longer term. So, that is a question that comes up repeatedly with investors. Where's ROI? You're spending all this CapEx, but I think it just helps reinforce the competitive moats and will accrue over time. The way that we're looking at big tech more broadly is that, a lot of these names have run up. We've been rotating out of these names for the last couple of weeks now, rotating into smaller cap names, more value oriented names, because you have expanded multiples, high expectations, as you saw with Microsoft, Meta. I think the correction helped Amazon to a certain extent, that the bar had been lowered. But I think that big tech should likely remain choppy, at least for the interim, as we have uncertainties around geopolitics, the election, and just the sovereign debt situation.
So let's zoom out a little bit and talk specifically about AWS, because this is the number that everybody cares about. It was pretty amazing to see net sales up 19% year over year. We heard from Alphabet earlier this week in Google Cloud. We also heard from Microsoft. Amazon with AWS, James, they're the company that started it all. What's their competitive advantage? How do they continue to win business or compete against the second and third place, Azure and Alphabet? How do they maintain their position when there is so much competition out there?
Yeah, I think it's going to be more of a rising tide lifts all boats situation. Obviously is the number one scale player in the space, and all companies that are looking to the cloud, will utilize them in some capacity. I think that the spend over AI and the shift from analog to digital will only get stronger and get faster. So all three of these companies will benefit. It's really, for us, it's around what are the expectations around those growth rates, and are those reasonable? Like, for example, with Amazon, throughout the course of this year, we were expecting that growth rate to keep notching up toward the 20% number, which it has. So long as, the growth rates from an investment standpoint are, the bars are achievable, we think that, as you look into the medium and longer term, all three will benefit from it. But as far as, Amazon's specific competitive advantages, obviously they're the biggest player. They continue to iterate and provide more and more services, more one-stop shop solutions. So they're going to have an edge there. Obviously, Microsoft and Google are not standing still. But I think for us, it's as long as the overall industry trends toward CapEx spend and cloud spend continue to move in the right directions on a secular basis, then all three should be fine.
We've spoke to a number of guests about the Mag 7 and whether this is a time to hold or to buy the Mag 7, or to kind of play tech and AI in different names. What do you think when you're looking at, how to play the Mag 7?
We think that it's good to be there. For us, it's a question of what size. These companies were our top weight a couple of quarters ago, 5, 6, 7% weights in the portfolio, but now we've trimmed those back to between 2 and 4. And we've we've exited Google, for example. We no longer hold that. And, which much smaller in Tesla, much smaller in Amazon, Microsoft. So for us, the trends continue to be the friend of these companies, but given how much they run, we think that you hold them, but just at lower weights, and reallocate that to areas that have more opportunity. Like we like software, for example. We established positions some time ago in Nutanix, GitLab, and Datadog. We think those could do well. You look at Confluence results, and we think that there's a lot of opportunity there. We're going into value names at the same time. We like the commodities. We're not sure that the inflation trade is off the table.
That's interesting. I see Alcoa in here.
So, yeah, we have Alcoa, U.S. Steel. We think could be a real winner. We also like gold. So we are, we're betting on that. We added General Motors, for example. So we think that could be a great stock for as we look into 2025.
That was James Chakmak, technology analyst at Clockwise Capital. Keeping with tech earnings, we move now to Intel, which saw shares surge after the company gave a revenue forecast slightly above estimates, fueling investor hopes that a turnaround could be in store for the chipmaker. For more on the report and the comments from Intel's CEO, we spoke with Bloomberg Technology co-host Ed Ludlow.
There's a lot to unpick here. It's not straightforward because in the quarter gone, Intel, which was previously like one of the world's leading chip makers, has given us a mixed bag. Its data center chips business did better than expected, but its PC business, where it has historically been the leader, did worse. The answer to that is customers had inventories and they worked through backlogs. And the almost $3 billion of impairment charges that Intel took relating to headcount reduction, cancelled projects. And what's so interesting about that is if you look at the estimates going into this quarter, analysts on Wall Street had not factored that in. So it's a surprise, a negative surprise. And even so, the top line of the story is maybe there's some hope here for Intel.
They're reducing headcount by 16,500 employees. Is that on top of the other headcount reductions this year?
This is a confirmation of the previously stated plan for headcount reduction. And the literal update is that the audit committee of Intel, a section of its board, has approved that plan. So the number is final, 16,500 staff to be cut. And again, I go back to the impairment charges. If you look at the adjusted loss per share in the quarter gone, much, much wider than anyone on the Wall Street had anticipated. And a part of that was that the impairment charges it disclosed relative to headcount reduction, but there's other things in there, they just hadn't factored that in for this quarter. Intel wasn't able to guide for it into this quarter. So it's a timing and an accounting issue, which sometimes can be a bit dry. But there's much more to discuss.
Okay, well, speaking of much more to discuss, the Intel CEO, Pat Gelsinger, saying in a statement that he intends to keep the company together. Yes. He says that distinct but better together is the strategy. The context for this is reporting from earlier this year that said they were exploring a separation of parts of the company.
So it's complicated. And first off, the headlines from Pat Gelsinger were a part of a brief conversation that our colleague Ian King had with him on the phone. Right. And the context is, yes, Intel is a chip company. It offers chip products, processors that go into computers and data centers and other business areas, but it also has a manufacturing business, which historically, the reason that Intel was so good at chips is it manufactured them for itself. As many of your listeners have learned in the last 2 or 3 years, there's a company in Taiwan called TSMC that has basically taken over the vast majority of cutting-edge chip manufacturing on a contract basis for everyone else. And Intel had really fallen behind. But Intel's ambition is to have a company where it has its own products, it manufactures its own products, but it also wants to manufacture chips for others, just like TSMC does. And that's a long answer, but the short of it is, this is Pat Gelsinger saying, yes, we're going to run the company that way, 2 separate divisions, but no, we're not going to sell off one part to a third party or be acquired by a third party. That's kind of reading between the lines because he was not explicit.
Ed, you have to wonder how much patience investors have right now to see this turnaround play out. Because like Tim had mentioned, Intel stock is down almost 60% year to date. So what do we know right now about just how urgent the need for the turnaround is when you think about the share price?
I mean, do we have to wait? What Intel told us for the final 3 months of this year is, here's a range of revenues we think we're going to have. At the midpoint of that range, it was just slightly ahead of consensus estimates. But the market is, what's the saying, you guys, the investors vote with their feet, right? I think that's the read here. They look at the commentary from Intel and say, you've done some really painful things in the quarter gone. You've let go of a lot of people, cancelled a lot of projects. You had a pretty rough quarter in your PC business where you were once a leader and you've fallen behind. But as we look to the next 3 months and beyond that, there are signs that you might be turning a corner here.
Our thanks to Bloomberg Technology co-host Ed Ludlow. Also, big thank you to Emily Graffeo stepping in while Carol Massar was out this week. And that wraps up the first hour of the weekend edition of Bloomberg Businessweek from Bloomberg Radio. Coming up in our next hour, we are all in on AI. We explore the notions of thinking and intelligence in large language models with the author of The Deep Learning Revolution. Plus, calling all Zwifties, or Zwifters, the immersive indoor cycling gaming company is using AI to try to get ahead of the competition. This is Bloomberg Businessweek.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including a new cycling craze harnessing the power of AI. Plus, the tequila brand co-founded by Michael Jordan and counting stars such as Derek Jeter, Serena Williams, and Michael Strahan as investors. The story of Cinco Tequila coming up. First up this hour, we cannot seem to stop talking about AI, and perhaps for good reason. Just look at what's happened to the companies that are in the space. Alphabet's investments in AI seem to be paying off. Microsoft's GitHub has agreed to bake AI models from Anthropic and Google into a coding assistant used by millions of software developers. And earlier this week, the Wall Street Journal reported that Elon Musk's xAI is in talks to raise funding at a value of $40 billion. But as investors reward companies' use of AI, others are ringing alarm bells about getting the tech under control before it controls us. Dr. Terence Sinowski is Francis Crick Chair at the Salk Institute for Biological Studies, also distinguished professor at the University of California at San Diego. He's also president of the Neural Information Processing Systems Foundation. His dual expertise in AI and neuroscience led him to write the book ChatGPT and the Future of AI, The Deep Language Revolution.
I think that what's happening right now is really, unbelievable. I was there at the beginning. Geoffrey Hinton and I collaborated in the 1980s. All the learning algorithms that are being used today for these large language models and deep learning were developed by us back in that era. And what we didn't have back then were computers that were fast enough that could scale up these models to be, to be able to solve these very difficult problems in artificial intelligence. But the Neural Information Processing Systems Foundation, I'm the president. We organized the biggest AI meeting, and in December we're expecting 16,000 researchers to descend on Vancouver. Right after, by the way, Taylor Swift, she's the big headliner on Sunday, but we have the rest of the week.
So I want to ask you, how did you think about neural networks and large language models in the 1980s? How do you think about them today?
Well, we actually had a premonition that these large language models, they were small language models back then, were really good at language. And that was a particular project, a summer project for a graduate student in my lab called NetTalk, which was trained on a dictionary to be able to pronounce English text. If you give it an article from the Wall Street Journal, and they would pronounce it in an understandable way. And this in linguistics is a very difficult problem because English is so irregular. There are a lot of regularities, but you also have irregularities, and then you have rules for the irregularities. But it really was amazing that a small, tiny network with just a few hundred units and tens of thousands of weights, the parameters, the connections between the units could do that. It was like an amazing compression of complexity. And now we know that these large language models, the deep learning networks, they love language, and they are capable of things that we never could have imagined.
That's really what I wanted to talk about. The idea of super intelligent AI. Mm-hmm. What are we not thinking about? What's the threat out there?
My good friend Jeff is very concerned, and I think he's one of the smartest people I've ever met. And if he's worried about it, then there's a concern. However, I think that even if you're concerned, it's very difficult to know when that's going to happen, if it ever will happen. And there are super forecasters out there, and this is from The Economist magazine, who are much better at people who are experts at predicting, if and when there may be a catastrophic or an existential threat. And it turns out that in fact they're not as concerned as the experts in AI. I'm happy that someone is thinking about the worst case outcome, because if not, then if it ever happens, we're in trouble. But right now, I'm more concerned about trying to understand how they work mathematically, and also to learn more from the brain. After all, these were designed back then. Jeff and I looked at the brain, the only existence proof you could solve any problem in AI. And, we tried to build something that was based on similar principles. So now we can continue. There's a lot more in the brain we can learn from.
But paint that picture for us, because I think a lot of people are worried about doomsday scenarios here. And if Geoffrey Hinton is worried about that stuff, I mean, we should be worried about it, you're saying?
I think that we should be cautious. That is to say, we should be constantly thinking along the lines that Jeff is in terms of what could possibly happen, and be cautious and put in precautions so that it can't happen. What I'm really concerned about are the unintended consequences, things that you cannot predict. Something may happen that no one thought of, even Jeff.
Yeah, and we have learned, certainly, right? Great financial crisis, pandemic, like the unthinkable can happen, and you throw technology into it and you just kind of don't know where it's going to go.
Exactly.
I got to ask you, because I am still trying to understand, and I get worried that we throw these words around, certainly not you, but we, as we try to understand this, not having full comprehension of what artificial intelligence, the large language models that we're talking about today, where it takes us. Is it as subtle and evolving and life-changing as the internet was for us?
So this is something that is emerging, and I have, since the book was sent to press in the summer, I have a Substack where I have tried to fill in with the new things that are happening, and I'm preparing something, a new 12th version the blog on the question of whether AI is overhyped or underhyped. And I've thought a lot about this, and I think that it depends on the time scale. I think that on the short time scale, it is overhyped. There's no doubt about it. There's just so much out there. I mean, every day the newspapers are filled with AI and your program. But I think in the long run, it's actually underhyped. I think the real change in the internet, for example, didn't occur within the first 10 years. It was much later. Again, unintended applications that emerge that have enormous impact on our lives, like social media. So I think the same thing is going to happen with AI.
But is it different? Like the internet is not, I wanted to say comfortable, but it's not, because there's some really bad things that happen, and we know that, right? And that's the battle we have with social media, and we want to talk to you about kind of regulatory oversight of AI in a moment. But I'm just trying to understand, it does feel so seamless and just such a part of everything we do, but it hasn't necessarily replaced a ton of jobs. It's created jobs. It's replaced some jobs, I guess you could say. I'm just trying to understand, like, on what scale do you put it? You mentioned the internet. So is it apples to apples, or is it something else?
No, well, first of all, it uses the internet. So I mean, right. That's like the machinery that you need to reach to scale up and reach a large population. But it's more intimate than the internet in the following sense, that it talks to us, right? I mean, it's as if an alien landed on the Earth and could talk to us in English, and it knew everything about what humans' history, everything. And the only thing we can be sure of, it's not human, but it's really quite remarkable. Let me give you one example of something that I was really surprised at. When they did a study of whether people who needed cognitive therapy preferred real humans or AI, they preferred AI. Which was really quite remarkable. I didn't expect that. And part of the reason is that the AI is not judgmental like humans.
Wait, but doesn't it depend on the data? Like we talk about...
It wasn't getting trained on judgmental data. Is
that
right?
Actually, it's a good question. What was it trained on? I think that it was fine-tuned with data from real subjects that were talking with a doctor.
Wow.
But even without that, I'll tell you something, again, is shocking, is that it is actually empathy. These large language models can empathize with humans. And why is it? How is that? Well, it actually absorbed a lot of text out there, novels, letters, and Reddit and so forth, and where empathy was being part of the discussion, and so it absorbed that too.
Well, I wanted to hear a little bit of your thoughts on what we heard from Elon Musk. He actually participated in a surprise conversation at the Future Investment Initiative to discuss the future of AI.
It's most likely going to be great, and there's some chance, which could be 10 to 20%, that it goes bad. The chance is not zero that it goes bad, but overall, one could say that the cup is 80% full is one positive way to look at it, maybe 90%.
Okay, 80 or 90% positive. The question I have for you is, do we need an international regulatory body to ensure or help ensure that this goes the right way?
Well, as you know, in the UK, they've passed an AI Act, which is like 100 pages long and, incredibly detailed, and it's already obsolete. AI is just moving, blasting forward, and, you're trying to catch up with it. But I do believe that it's absolutely essential that it be regulated, and it should be regulated by people who are building it. The government, is in the business of protecting people, and we'll see how that plays out. But in, for example, molecular genetics, this happened, back in the 60s, 70s, they had a meeting where they came together at a seminar, and they came up with rules and regulations for doing experiments under the careful protection so that nothing leaks out, nothing gets out. And I think we need to do the same.
Okay. So when does, as you said, 10 years for the internet to really kind of make its impact and presence really known and maybe, integrated into our lives? So is it a decade before we see LLMs and AI at this level integrated into our lives?
We are at a stage that aviation was at when, at Kitty Hawk, the Wright brothers made the first flight. It was 10 feet up and 100 feet long. And that really was the, something that then took decades and decades to build. And the most difficult thing, by the way, that airplanes, design of airplanes had to solve was control. How do you make it go where you want to go without crashing? And that's something that, again, is like what we're going through right now with AI. And yes, it will take decades. It's not going to happen overnight.
That was Dr. Terence Stenovec, Francis Crick Chair at the Salk Institute for Biological Studies and Distinguished Professor at the University of California at San Diego. His new book, ChatGPT and the Future of AI, The Deep Language Revolution, is out now. You're listening to Bloomberg Businessweek. Coming up, from the road to the web, how one app is harnessing the power of AI to improve your cycling routine. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Well, full disclosure, people who know me know I ride bikes a lot.
You certainly do.
I'm a big Zwifter, too. Zwift is well known among cyclists as a way to train or compete when it's too cold or rainy to go on your bike outside, or if you want to get a quick workout in. The app connects cyclists riding their bikes inside to real-time races in virtual worlds through a mobile device, a computer, or an Apple TV. Think about it like kind of like gaming with your bike. The company has raised $620 million from backers including KKR, Permira Holdings, Amazon's Alexa Fund, and more, giving it a market value of more than $1 billion. We've got with us Eric Min, the co-founder and CEO of Zwift. A lot has happened since you last joined us on Bloomberg. Katie, I don't know if you saw this. We got to do this virtual ride together.
No,
like
I remember it well. It was pretty cool.
Yeah,
I thought you were going to wear the outfit.
I'm not wearing the kit.
It's disappointing.
Yeah, we're actually,
you've got your helmet over there.
I got the helmet here.
Pop that on.
Don't need that for Zwift. But there's a lot has happened. There was a round of layoffs earlier this year, a big hardware pivot. But I think you being back as sole CEO of the company is sort of among the biggest news. Give us an update. How's the business going?
The business is doing really well. I mean, it's doing better than we expected. We've had some change earlier this year, and we've pivoted, and really the focus for the business has been really around like what can we do to supercharge our community. I think, which is the most valuable asset that we have. So we are a leaner team, and we're finding that we're moving faster. Of course, we're doing less. But we get to focus on the things that I think will really move the needle for us. So the business is doing great. We launched new hardware this year. it's surprisingly doing very, very well. And over the next few months is really the height of our season.
I do want to explain to people who might not know what Zwift is. When Eric says new hardware, we're talking about an actual bike that Zwift has released. It's called the Zwift Ride Smart Bike. And typically the way that people use Zwift is they hook up their own bike to what's called a trainer, and one that can be hooked up to a virtual world using Bluetooth or another type of connection. So instead of you're still using a trainer with the smart bike, but what's the idea behind a $1,300 bike?
Yeah, I mean, the price point is an important one. It's probably less than half or a third of what you would typically pay for a smart bike. So we've, I think, innovated on price. We've also developed and designed it in a way that you can leverage existing hardware that you've already invested in. So what you have is essentially a bike frame that slides onto a trainer that you probably already purchased. The other piece of innovation that we pushed about a year ago is what we call the Zwift Cog. And, for non-cyclists, it's very complicated to understand what kind of gears you need to put on these trainers. We got rid of all that with a single cog. And then what we layered on top of that is a little device that can control and create the gears virtually. And, our goal is to, of course, bring down the cost of the hardware to get onto Zwift, but also just to simplify the onboarding experience. And that is how we open up the market. All our studies have suggested that those are the two drivers for holding us back from growing even more.
Well, let's talk a little bit more about your business. I assume you make money off of a subscription-based sort of membership there. Where are you when it comes to membership? I think the last time you guys spoke, you said around 1 million members. How has that number changed?
We're over 1 million. I think the pandemic did wonders for us. It also it was a double-edged sword because, of course, like many companies, we thought the growth would continue forever. But what we're finding today is that we're growing. We're certainly growing on a number of different levels, both revenue and subscribers. But I think, to double your business like we did during the pandemic is just an unrealistic expectation. So we've adjusted our business to that.
One thing that you've also done within the last year is actually increase prices, I believe the first time since 2017. Yeah. So for years it cost about $15 a month. Now it's $20 per month. If not an annual membership, that's a monthly membership. How did members respond? What has churn been like?
Well, I don't think anyone likes price increases. Let's be honest, right? But I think certainly we feel very good about it. The value that we offer to our community at $20 a month and $200 for the year is really good value, given all the other products that are out there and the experiences that we offer. But things have gotten more expensive since 2017. We've not raised the prices, and I remember reading from community members saying, hey, you should have just increased prices incrementally. I think, well, we would have actually collected more revenues had we done that, but we felt that the timing was right for us to increase the price, and I think the customers have largely voted with their wallets.
Any more price hikes on the horizon?
Look, things, I would never say that there will never be future price hikes. I think the $5 move on a relative basis was big. If we do have future price hikes, I think we should do it more incrementally, like I see from Netflix almost every year.
Well, I'd love to talk about, what went into that. Like Tim mentioned, first price hike since 2017. What did that decision tree look like? Because you think about everything that's happened since 2017, it's exhausting, and it's been a really strange economic moment.
Well, we delayed our price increase, and we've done this twice before. Every time we've done a price increase, how we feel about it is like, well, we should have done it much earlier. Look, things do get more expensive. Our costs have gone up, and we haven't passed that on to our customers. The product is vastly improved since 2017, so we feel really good about it, and we stand behind it. When we were committed to making that change.
Yeah, that's actually one thing that I haven't talked about. The heads-up display, the worlds. There's been a lot of changes to the gaming environment since I started Zwifting, which was during the pandemic. Personally, I don't see myself. That's the main way I actually ride and get exercise, because I have 2 little kids, and going on a 5-hour bike ride on a Saturday like I used to do.
Your wife isn't into that?
She's just not feasible right now. So Zwift is where I do it. You run a lot, Katie.
I do.
Are you a Strava person?
No.
Okay, that's interesting. She's a Garmin person.
I feel like I killed a line of questioning you were about to go
That's
down.
fine. I'm going to turn this way, and I'll talk to Eric about it. You did. One thing I noticed recently with Strava is an AI sort of integration that they're experimenting with. How are you using AI? You recently launched, for me recently, virtual ride partners, which I find a really helpful thing for me. So this is like a pacer that will kind of go at a specific speed that you can keep up with, and it's really helpful for training and for riding. How are you thinking about AI?
So we already use AI in our engineering development. So that's already been happening. I think in terms of how we can expose these types of technology for consumer-related features, we're absolutely thinking about that, and the 2 obvious places will be the conversational, AI experience that, for example, Strava is doing, and I think that's going to be table stakes for many products. It's not going to be something, so innovative. We have to offer it. And I think the other opportunity for us and others is just using machine learning to figure out exactly what to offer in terms of content and when and with whom. That, I think, is the next innovation.
That's more like an Instagram timeline approach, where it serves you what you think you want.
Yes. And I think, it can factor into, your usage behavior, who your friends are, when, what kind of events you like, what kind of fitness you have today, and we can serve up the right content at the right time. I think that is innovation that no one has really produced yet, but that's an exciting opportunity for us.
What about AI and coaching? I ask because I think about myself. My world revolves around me, and the thing that I miss about college is having a coach. And I was part of a running club, but it was just too much. So I'm sort of like making up my own training plans. I could see a lot of value in having an AI coach be able to see your stats, see what you're doing, and suggest workouts.
Let's face it, if you can afford it, you'd rather have a human coach.
Right.
Because they will motivate you more than any tool that you have in front of you. But I think the 2 pieces that I just mentioned to you, which is like a conversation about how you did with your workout, and then the AI to tell you exactly what you should recommend next. Those 2 pieces should, in theory, represent a replacement for an expensive coach. And that, I think, is a solution for, the 95% of the customer base. The 5% should and we'll continue to invest in human coaches.
$200 to $250, $300 a month and
or more,
up, by the way,
for
enough
a coach?
for a coach. Yeah,
I can't.
For a coach that you've never met and just puts workouts in Zwift and training.
Also, I mean, I'm not going to the Olympics.
You did go to the Olympics, though.
I did.
I
didn't compete at the Olympics. I'm devastated to say. It feels like a steep bill for my ambitions.
Eric, I'm wondering about competition here because you guys were pretty much the only game in town for a while, with what you did at least. Copy Trainer was around before, but Training Peaks bought IndieVelo, and now they have Training Peaks Virtual. I remember before I joined Strava, I used Training Peaks, and I quit Training Peaks during the pandemic to go to Zwift, not Strava. How are you thinking about competition right now?
Well, we have a lot of competition. It's not surprising, and we've had it all along. I think the Training Peaks and IndieVelo makes absolute sense for Training Peaks. I mean, we are partners with many different training platforms that are out there. We launched something called the Training API, and we've onboarded multiple training apps. So we'll continue to be a platform where coaches and these coaching apps can push activities and activities on where you can actually do the event on Zwift. So that won't change. It'll be really, and I don't know the strategy behind Training Peaks and what they'll do with IndieVelo, but it doesn't really change what we need to focus on. And our focus is really to do everything to continue to add value and features for our community. That's really the important asset that we have.
Well, let's talk a little bit more about the future. This is something I love to ask private companies. Are you thinking about IPOing? Would you be open to either acquiring a business or being acquired? What are you thinking about along those lines?
I think we should always look at opportunities to acquire, merge. Those are opportunities we should be looking at all the time. In terms of what is our end goal in terms of like a liquidity event, I think that just will take some time. But I think we all have aspirations of being a publicly listed company. Whether that happens, in 3 years or 5 years, I don't know. Whether we do that alone or we do it with others, these are all, I think, things time will only tell how that unfolds. But absolutely, our board, my co-founders, my management team, and investors have big aspirations for this business, so that hasn't changed. It's just timing is everything, right?
I mentioned that you raised more than $600 million since inception. Last time you and I spoke, you said you didn't need to raise money in the near future.
Yeah.
How's the cash balance looking right now?
We're very fortunate. We didn't spend all that capital, so we have a pretty strong balance sheet. I don't think we need to raise any more capital. That's helpful, and that gives us
ever.
I just don't. Yeah, ever, which is great. It gives us a lot of optionality. But look, having just a lot of cash doesn't help either. We need to deploy it smartly, and we need to think of how we can leverage that to build the business.
Last question: how do you, the cycling business? There's a ceiling there. There are only so many people who want to be riding bikes in their basement. How do you get people like Katie?
Well, first, you have to get rid of the basement or the garage thing.
Yeah.
And that's why we launched the ride. It's beautiful.
It's my basement.
It's in white. We deliberately picked white instead of black because in our testing, it resonated really well with women.
That's interesting.
Yeah. And I think, we're not just going after cyclists. We're going after people who want to exercise and who want to get fit. And cycling, just the indoor bike and cycling in general, happens to be just a great activity. You can do it for a long time. It's low impact, and you have access with your hands, and you can get engaged with an experience like Zwift. So it's not just for cyclists. We hope that the bike really opens up the addressable market for us.
Our thanks to Eric Min, co-founder and CEO of Zwift. Still ahead on Bloomberg Businessweek, 5 rival NBA owners meet for dinner and craft a premium tequila. The story of Cincoro Tequila on the other side. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Okay, Carol Massar.
I'm with you.
Picture this.
Yes.
Michael Jordan.
Cool.
Yes, that Michael Jordan.
Really, that's what I thought.
Jeannie Buss of the LA Lakers.
Cool.
Wes Edens of the Milwaukee Bucks.
Oh my God.
Whit Grauspec and Amelia Fazzolari of the Boston Celtics. They all get together for dinner. No, it's not the start of some sort of, NBA owner joke.
No, it's sort of a really cool company.
Tequila company. Cincoro Tequila.
Right. And company lore has it that the dinner happened back in 2016. This is like, you can almost feel like it should be a streaming series already. Fast forward to today, and Cincoro Tequila has sold more than 2.5 million bottles. It's won more than 24 awards. Investors now include Serena Williams, Derek Jeter, who was just in our studio a couple weeks ago.
He wasn't drinking tequila.
He was not.
No.
Also Michael Strahan and more. Amelia Fazzolari is co-founder and executive chairperson of Cincoro Tequila. She joins us here in our Bloomberg studio. Amelia, it is so good to see you. How are you?
I'm great, and it's great to be back in the building.
What do you think?
I love it. I miss it.
Does it bring back some good memories?
100%. I was here 23 years.
So, it's a long time.
You did everything from head of marketing for Bloomberg TV. You ran the trading system department. You led the product strategy department.
I did.
And now this.
Tequila.
Tequila.
I know.
Well, we always love like someone's journey and how they get to something. Like, what is it about kind of your background and the things that you did got you to
Right.
where you are today?
Well, actually, that's really interesting because there is a connection, because most of my time at Bloomberg, I was involved in startups and involved in starting new businesses. And so and I remember Mike Bloomberg saying to me a long time ago, it doesn't really matter what the subject matter is, it's your approach to starting and running a business that matters, because you can learn the subject matter, right? And so I did remember that when we were starting the tequila company, because it was very different than commodities or anything else I was involved in. But it worked. You know, it was a focus on trying to do things at the very highest level. And you know, my partners are incredible, and they're incredibly competitive, and so there's a very high bar.
So it's interesting because, you know, the story, that dinner goes back in 2016 as company law, right?
Yeah.
But you didn't launch for a few years because you just celebrated your 5-year anniversary.
That's true. I'm glad you're asking that.
Why did it take so long? Is that normal for tequila? I don't know how
I don't
tequila
think that
works.
is normal for tequila, but it was the norm for us. And the reason for that is, and one of the unique aspects about Cincoro is we created this tequila. We literally created the recipe. And the liquid was our North Star from day one. Nothing else mattered. We had to get the liquid right. And from that first famous dinner now in the summer of 2016, you know, Michael was a true tequila connoisseur in the group, and
That would be Michael Jordan.
That would be Michael Jordan.
Okay.
That would be MJ. That would be Michael Jordan. And he taught us how to drink tequila. And we realized we had a shared love for tequila, and that really was we had to make the most delicious tequila. That's what we talked about. We wanted a tequila that was super smooth and had a long, beautiful finish like a fine cognac or bourbon. And so it took us 3 years.
Wow.
We created 1,000 tequilas over a 3-year period. And to this day, Michael and I taste every batch before we bottle. Michael Jordan, to ensure that it is the best.
What did he teach you about how to taste tequila?
Yeah, that's great. Great question. So we looked for 4 things, and first being color. Even the Blanco, it's clear, but it needed to be a crystal clear Blanco, and obviously our aged expressions. And then there is the nose, like what does it smell like? You wanted to have a beautiful aroma. And then the taste, which needed to be smooth on the palate, and then a long, beautiful finish like a fine cognac or bourbon. So that's what we looked for.
That was the cork popping. I can't say that, but we'll get to that in a moment. Keep going.
What I think is so interesting about this is when you look at especially celebrity-backed alcohol companies, oftentimes they sort of go with, okay, what is the hot spirit of the moment? And it seems like you guys were a little ahead of tequila becoming such a big part of American culture, at least, because in the last few years you've had some huge exits when it comes to tequila, but you guys had this idea close to a decade ago.
We did. And for us, you know, Michael Jordan's part of the group, and now we've got other incredible celebrities part of the group, but it was never about the celebrity for us. And if you notice in our marketing, we're not celebrity focused, or you know, there's no one standing up saying, please, you know, buy this tequila because of me. We want people that you may hear about Cincoro because of Michael Jordan or Derek Jeter or Serena Williams, but you're going to buy your first bottle, your second, your third, and hopefully many cases thereafter because you love the tequila. You love Cincoro, and that's really important to us. It's about being super authentic. Actually, there's a ring around the neck of our bottle that says "Share Truth," and that is our truth. It is about being, you know, authentic and true to our North Star, this delicious liquid.
Your bottles alone are stunning.
There's a whole story there too.
What is the story?
So during that 3-year period where we're focused on making the liquid, Michael called Mark Smith, who was the vice president of special projects and innovation at Nike at the time and had done everything Jordan. And Michael called Mark Smith and asked him to design a tequila bottle for him. And so the story is that Mark said to Michael, close your eyes and describe what you see using 3 words. And Michael said, sleek, contemporary, and unique. And that was the brief for the bottle. And the bottle...
It looks like a piece of crystal or something like you would have up on a shelf, right?
It looks like a trophy.
Yeah.
And if you feel the bottom of the bottle, it actually slants 23 degrees as a nod to MJ's jersey number. The stopper slants down 23 degrees. And then get this, if you take 23 bottles exactly and you line them up head to toe, they form a perfect circle, and the diameter of that circle is the same as the tip-off circle on an NBA court.
Oh my God.
That's pretty
A
cool.
lot of thought went into this.
It did.
Oh my God. One thing I want to take me back to, because you said with Michael Jordan that you sampled about 1,000 tequilas. That process, were you down in Mexico? Because we've done a lot of reporting on, kind of where all the tequila comes from and talked about it. Tell us about that process.
Yeah, so I did go down to Mexico a ton. Wes and Wick joined me on a few of those trips, and we actually started with more than one distillery because we actually had them compete, and we wanted to really refine the taste profile. And then we finally landed on one, and we would get samples, bring them back, and we would meet as a group and taste through a whole table of tequilas.
Was there a lot of debate and disagreement? As you went through the process, I'm just curious about that.
I think, not really, honestly. And that's been an incredibly magical thing about my partners and I. We have been really aligned from day one.
Yeah.
They're true collaborators and incredible team players. But we did align on the taste profile from the second, from right out of the gate.
What do you see as the market for this? Who do you think wants it? Who has been buying it? How do you grow it?
Yep. So the great thing about Cincoro is that the taste profile is appealing to a very wide audience. We don't have that traditional agave burn. So if you had that bad tequila experience, you love Cincoro. If you like whiskey,
I've had that bad tequila experience.
You're gonna love Cincoro. And
hello, college.
The one word that everybody uses to describe Cincoro is delicious. And so it's a high-end tequila. It's a high-end sipping tequila. We gravitate towards the more affluent consumer.
And is that more, is the price point aligned with that?
Mm-hmm. Yeah, 100%.
I've heard horror stories about liquor distribution. Mm-hmm. And I'm wondering how
competitive is. How do you get in?
How do you make sure to get in with the right? I've talked to owners of local stores who are like, I'm not allowed to carry this one brand because my distributor is this distributor and carries this one brand.
Mm-hmm.
It's really tough for independents in some cases. How do you navigate that?
Hard work. There's no substitute.
But it's possible.
100%. You've got to.
I mean, I've heard words like cartel, mafia, to describe the industry.
Right. I think that it starts with having an amazing product, and we want the product to speak for itself. And so there are difficult accounts, and it's a super competitive market in the United States. But you grind through it. And, we have a product that we are so proud of, and that when people taste it, they are so proud to have it on their back bar.
Sports, it's pretty amazing. Bloomberg spends so much time on the business of sports, and it does feel like investor interest, the value of teams, there's so much interesting stuff going on. And my understanding is that your husband is thinking of selling his stake.
Yes.
I mean, I know you probably
underway.
can't. I know, but I mean, it's just interesting. I don't know if there's anything about timing or owned it for a while and you just move on. What is it?
Yeah. No. Well, I think that's for Wick to talk about. But he's got two families: a Celtics family and his family, and his family's interested in selling. So that's what's going on.
We find too, we have a lot of guests, whether it comes to the spirits world, whether it comes to tequila. Tell us about, because there's two options. Tell us about the second one that you brought us.
Yes. So the second one is our brand new Cristalino. This is a limited edition. It's this beautiful platinum silver bottle. And this Cristalino it's really actually a super hot category for tequila right now. They're saying that the category will be about 6% of the tequila market by 2028, and it's a really key driver of premiumization. The liquid is our añejo liquid, and it's charcoal filtered to remove the color, and it's absolutely delicious. We just had our 5-year anniversary party where we celebrated the launch of Cristalino, and people tasted it for the first time and absolutely loved it. So definitely try to find a bottle because they're going to run out.
What are you thinking in terms of product growth and product category growth? You obviously have these two different lines, but how do you come up with
this is
more?
a different taste.
It is a different taste. So we actually have a Blanco, a Reposado, which is slightly less aged than the Añejo, We also have an extra añejo, which is aged 44 months, and that's in a black crystal bottle, and that's really our halo expression. That's about $1,700 a bottle. It's Michael Jordan's favorite. And we have a Cincoro Gold, and it's in a gold metallic bottle, and that gold is a combination of our Blanco Repo and añejo and extra añejo. It has a ton of extra añejo in it. So yes, we have a beautiful portfolio of 5 expressions. This is our 6th, and we're doing some super exciting innovations next year.
So how much do you expand it? Because that's a lot of choices already. When you think about the portfolio, how do you think about where you want to go?
Yeah, so innovation is really in our DNA. We've been innovating the brand since we launched. We've come out with either interesting bottles or, for example, a limited edition new expression. So where we're going next year is, like I said, we're going to do 3 different innovations. 2 are a collaboration with some super cool people. So I'll be back to tell you about those. And that's how we're going to stay current and really in the news.
How do you think about who you want to partner in or partner with or bring in as additional business partners on this? Because it sounds like Michael Jordan has a very specific vision. It sounds like you do as well, right? So I'm just curious how you figure that out.
Yeah, the first thing is you got to love it authentically and just really live the brand, and then really embody the ethos of the brand, which is doing things right, working hard, and striving for greatness.
What's the hardest part of this? Because I do think, it's a crowded space, but it sounds like you guys are trying to carve out a certain space. What's the hardest part of this?
It's a long game.
Yeah.
This is not, the business is not something that you do. It's not a quick in and out. We're in this for the long term. We really want, what's happening internationally is really exciting, because I think in many of these markets we're in the first or second inning of the game, and so it's going to be really exciting to watch it grow and have people have an appetite for this.
Tough to import, or once you figure it out, you figure it out?
You figure it out. I mean, there's definitely teething pains of doing all of that, and there's a lot of legalities around the liquor business on a global scale, but it's not insurmountable.
That was Emilia Fazzolari, co-founder and executive chairperson of Cincoro Tequila. And that wraps up the weekend edition of Bloomberg Businessweek from Bloomberg Radio. Thanks so much for joining us. Be sure to tune into Bloomberg Businessweek Monday through Friday starting at 2 p.m. Wall Street time on Bloomberg TV, Bloomberg Radio, and on Sirius XM channel 121. And you can listen to us on Apple CarPlay and Android Auto free in the Apple App Store or on Google Play. You can also watch our daily broadcast on YouTube. Just search Bloomberg Global News. And we're simulcast on Bloomberg Originals, available at Bloomberg.com/originals and streaming platforms like Roku, Amazon Fire TV, Samsung TV Plus, and more. Find our Bloomberg Businessweek podcasts at Bloomberg.com, Apple, or wherever you get your podcasts. The latest edition of the magazine is available on newsstands now at Bloomberg.com and always on the Bloomberg Terminal. I'm Tim Stenovec. Have a good and safe weekend, everyone. Carol back next week. This is Bloomberg.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.